All right, we are now officially live. Adjust my chair here real quick. All right, what's good? What is good? We are here for the first market outlook of 2026. Super grateful for each and every single one of you guys who are ready to kick off our best year yet. I hope you guys are feeling good. Hope that you are refreshed from the holidays. And yeah, man, without further ado, we're gonna get straight into it. Um, and yeah, let's have a great start to 2026, man. So let's get straight into it. We're gonna kind of dive in as you guys continue to pour into the live here. First and foremost, as far as news goes, obviously the most trending topic of the entire world is, what's going on with Venezuela and the United States apprehending Maduro. So that's not financial news, but it's still something that does shake up global markets as far as like you know rumblings of like war and protests and stuff like that. So I think that really affects other things such as like the currencies and gold and stuff like that. But we'll see. We're gonna keep an eye on how that continues to shape out. But as far as financial news goes, if we refresh here, we see that we have tomorrow morning at 10 a.m. PMI news. Okay, so that is already starting off our first like real trading day of 2026. Because I know technically we started 2026 on Friday, like as far as trading, but um, I don't know. For the most part, this is like the first fresh week of a brand new year. So we do have news right at my window when I start looking for trades at 10 a.m. So we're gonna see how that shapes out. And then we have PMI Wednesday at 10 as well. And then unemployment claims, NFP. Like there's just a lot of news that's gonna come in to start off the year. So definitely that should bring in some volume. Now Friday, we did see though a big movement for sure. We had this massive drop off that took place to basically shift the market downwards to end the week. So that's where we're at now. Is just like the last couple hours before market closure, we were just recovering some of that big drop. As far as like my specific model, it did not do basically much at all last week, which doesn't really surprise me. Again, the conditions last week of holiday season, end of the year, it's just not really something that I had any type of expectations for, if you guys know from following me this whole time. But we'll see now how this week plays out. Again, last week we didn't really have any 2-to-1s. We just had like break evens and a bunch of no trade days and then a holiday. So definitely a very inactive week for me last week. And yeah, so as far as where we're standing right now, if we kind of zoom out to a 4-hour, there's going to be a couple different points depending on the overall idea the market wants to get to. Personally, I feel like the main objective is going to be the buy side liquidity that stands above all of these price points right here. Again, it's going to be a little bit different depending if you're trading futures or CFDs, like what that number is going to look like. But if you just look at the 4-hour, we have a lot of highs basically sitting at this level here. So there's a lot of buy side liquidity. If we're looking at this specific chart, basically above 25 850, 25,900. If I have to put a number, I'd say 25,900 is like that whole number that definitely price can get to and basically wash out all of these highs here. So that's gonna be kind of like my main focus. If we can get some type of bullish confirmations, once we start breaking maybe these highs, that would kind of be the first shift of structure area that can really get us above to 25,900. So I do think that's in the cards. Now, obviously, we did end Friday with a pretty strong drop off here, and we're technically still respecting all of these highs. So obviously, if price is gonna come lower, this would be the liquidity target. This low from what day is this? This is the 17th. So the low of the 17th would be like the primary sell side liquidity target to look at, and then the buy side would be above like 25,900 here. So really just depends how price respects this high point and this low point. So that's kind of the bigger picture. But now if we look at the smaller time frames here, like 15-minute, 1 hour, and we start to really look at these data points here. Okay, we're gonna need to see now how this leg of price shapes up. So from this high to this low from Friday, this is the range that we're kind of working within right now. So let me actually pull this, like, here we go. So bottom third of the range, this is the middle of the range, and then the upper part of the range. Technically, market structure is bearish right now. We had a very clear manipulation above London highs during New York session on Friday, and that kind of led to that big meltdown afterwards. So you can see that clear manipulation that shifted lower. So technically, market structure is bearish in the sense where you had like this low and this low, keeping price, and then we just completely shifted below all of that. So if price is gonna stay coming lower overall, I still would think we'd get some type of retracement, into the upper part of the range here, beyond the 60 to 70% retracement, maybe fill in some of these fair value gaps. And then if it's going to sell off, we should respect somewhere around there to take out these lows and then continue to whatever else is, price is looking for down here. Maybe, again, these lows over here. So again, we need to see how Asia shapes up. We need to see how London shapes up, and then take it from there. But yeah, overall, if we're gonna be selling, we're gonna be looking at potentially getting down to here. If we're gonna be buying, we do need to see a shift of structure, basically above where price created the high on Friday. That's if we want to get the 1 hour or the higher time frames aligned back bullish. Okay, because as of right now they are bearish. You had this low, you had this high, price came lower, tried faking higher, and then ended up closing lower as well. So everything really is technically bearish, with maybe a retracement and a continuation lower as what makes the most sense right now. But again, if we do see this high over here, maybe we make a retracement, give us temporary rejection, and if we respect this low point and start to close above here, that's really like a very strong bullish confirmation that we should be getting to 26,000 or 25,900, somewhere around there, to take out these highs. So just always remember, market structure is like the first thing I'm really always paying attention to, outside of my specific model or outside of my strategy. But just looking at what I would prefer to see as of right now, if once my strategy kind of starts lining up around 10 a.m. tomorrow, assuming the market structure stays respecting this high, then I would be more focused on selling for the time being. Again, I would prefer to focus more on buying. If we start to shift structure on the higher time frames of over here, then yeah, I can, at that point, want to invite bullish, confirmations for my strategy. As of right now, I'd probably expect some retracements and then hopefully get some rejections to short here tomorrow. But we'll see. Still got to line up, a couple sessions. But yeah, the main fair value gap in question, though, that leads me to believe we should go higher a bit is this one here. This is that first real strong fair value gap that was created from the drop off that took place post 10 a.m. on Friday. Again, where you can see market manipulation, and then this is that first real like strong movement that created the rest of that move. So yeah, there's a very prominent fair value gap here that I think price may want to retrace to. And that kind of puts us right into the upper third of the range where we should focus more on selling in that environment, or at least avoiding buying, one of the two. If we actually change this into like a traditional fib, we can see that tapping into that fair value gap, starts taking us into that 62 to 78% retracement area. So the fact that we have that type of retracement percentage right at that fair value gap is also very high probability for price to give some type of sell reactions off of there. So we'll keep an eye on that. Yeah, I think that's like the main thing that I'm really looking at. Short term, like as of right now, technically we did shift market structure towards the end of the session on Friday, so you can see price, forms that last little low, and then we shift above these highs, and now we're kind of hanging out there. So small time frame wise, we have shifted bullish again. Maybe we get some drop off, but I think ultimately overnight we'll see a retracement up into here, and then from there maybe some sell reaction. Just by looking at everything how it is right now, that's probably what we're looking at here. Yep, that's pretty much the bulk of it though for what we got right now with NAS. So now we simply wait. We're gonna wait till tomorrow. Now, if you're in the chat, if you guys are part of Akashex, I would like to know. You guys can let me know in the chat if you guys are in Akashex. Reason why I say it is because I do plan to upload some new content into the educator series that we have in the platform for my specific model that I've been teaching over the past couple of months. We don't really have a pre-recorded like video that explains it, other than like the recordings of the past live sessions and everything like that. Oh, my dog Steve is here. What's up, bro? All right, cool. So yeah, that's gonna be on there sometime very soon. I'm gonna get that recorded probably tomorrow and submit it so we can upload it and just have some fresh, stuff on there for everybody to use. But yeah, other than that, if you guys haven't gotten the new PDF that I sent out, you want to make sure you get your hands on that. You guys can shoot me a message or fill out the Google form that I have in my bio, and I can get that over to you. I have the PDF sent on a couple different channels. But yeah, basically it's this one, the Funded X Blueprint. This is really important because I know most of us are probably going to be using prop firms for the most part. At the end of the day, it's going to be your highest ROI, tool as a trader nowadays, obviously, to, like, for example, you can put 50 to 80 bucks in a 50K funded account and squeeze out a couple $1,000 versus trying to flip $50 into a couple thousand. That's much more difficult. But at the end of the day, I always will push prop firms in general as like the number one tool that we realistically have at our hands to like multiply money as fast as possible. So yeah, make sure you guys get your hands on this PDF because it's absolutely free. And it's not just about like this is not about my strategy. I have a separate PDF, which is this one that explains like my entry model for what I look for at 10 a.m. during New York session to actually like do the trading, right? But at the end of the day, you can have a good strategy, but not the right like path as far as how you see your capital, expand your capital and all that. And that's what this is for. So it just kind of gives you the framework of what you need to understand as far as risk management and scaling. Because at the end of the day, you don't need to use my entry model. Like some people like they just watch my stuff because they like to learn certain concepts like fair value gaps and session liquidity and stuff like that I teach. But they don't necessarily have like my specific entry technique. They might use some other things, or I don't know. You get me? But the point is that the entry model is just like one aspect of the trading, but the other side to it is like how you actually money manage and scale. So ultimately, again, you can go through the PDF, but we talk about like, hey, if you're trading prop firms, this is like your risk. If you're trading conservatively, if you're going to trade more aggressively, this should be your risk. And then yeah, just like making you understand the relationship of how the math works when it comes to like, hey, if you have futures accounts, you usually have a 4% drawdown versus CFDs, you have a 10% drawdown. So based on those numbers, this is how much you should risk if you're trying to pass your account in a month or less, or if you don't care about taking more than a month to pass. And yeah, like basically understanding your risk to reward ratios, your win rate, and how that also falls into it. But like for example, in December, like my entry model for the way I trade Nasdaq did about a 12R. Now obviously that can be a little bit higher or a little bit lower. That number is calculated by looking at scenarios where we would take either a loss, no trade day, or a 2R trade. So there were some trades that went for like 3R, 4R. There were some trades that, you know, went break even that were close to 2R that maybe you would have closed something. So that number, like, I don't want it to be misleading as far as like actually it being on the higher or lower side. Like there's people that can use the, you know, what I teach to pull more than 12R. And there's people that are going to make some mistakes or not trade certain days or hesitate or whatever. And that number might be half of that. And even if it is a 6R, like if you're in profit, like you're not, like you're good, you know. The problem with people is not being profitable at all, you get me? So even if you're slightly profitable a little bit, like you're in a great space compared to most people. But this is just showing like whether you use my entry model or not, if you can squeeze like 12R profit in a month, not in a day, not in a week, I'm talking about a whole month. So that's an average of about 3R per week, right? Because there's about 4 weeks in a month and you do 3R per week on average, like that's 12R a month, right? So again, how that translates into accounts, if you have like a 50K futures account, I mean, it doesn't even have to be a futures. It could be a 50K CFD account with TradeX. It doesn't really matter. But I just use the 50K futures as a point of reference because, I mean, I personally am doing that more nowadays as my main focus. And so 50K futures accounts risking 200 per trade. The reason why I did that was in the risk management portion, we were talking about how you have usually about a $2,000 drawdown when you have a 50K futures account. So if you're risking 200 per trade, you basically give yourself like 10 trades before you lose the account. And since I'm taking 5 trades per week on average, that means that I'm giving myself basically like a 2-week buffer of straight losers, like 2 weeks of straight losing before I burn a 50K challenge account, or an evaluation, I should say. And so if I'm paying like $50 to $80 for an evaluation, and they make you pay every month to reinstate that challenge, my goal if I'm trading futures funded is to pass it in less than 30 days. So I want to use a risk where I might do more than 200 per trade if I want to pass faster. But even if you're risking 200 to 300 roughly per trade, you're giving yourself a decent cushion of like, you know, multiple losers in a row before you burn an account. Like literally 10 in a row, actually, to be precise. So long story short, if you're risking 200 per trade and you did 12R for December, like how my strategy could have produced you, you'd be looking at like $2,400 total. So after profit splits, hypothetically, let's say you have an 80-20 split, it's still almost like $2,000. And then if you have, for example, in Alpha or in Top Step or in Tradeify or in Take Profit Trader, like I don't care what prop firm you use, usually most of them you can stack at least 3 accounts. That's kind of standard now. So 3 accounts, right? One firm, you're talking about a little over 5 G's a month. If you have 5 accounts, like Top Step lets you do 5, that could be 9,600. If you use the same thing and you have like Apex, right, and you have the max accounts at Apex, which is 20, that's a crazy income for 99.9% of the world in a month, right? So this is just, again, it's a sheet that like expands your belief level of like, damn, bro, like There's a strategy, and you don't have to take my word for it. I actually don't want people to take my word for it. I'd rather you actually go learn my strategy, or like have the PDF, or even if you don't want to do my strategy, look at what you're doing and ask yourself if you're able to pull, let's just even say like 5R to 10R a month. If you can do 5R to 10R a month, somewhere in there, like give or take, start looking at, okay, what if I had a 50K futures account that did 10R? How much would I make? Okay, and if you do it on one account, all you have to do is literally just buy two more evaluations at the same firm. Because these three account things, like sometimes people, they don't realize, because maybe you've been trading like live funds in a broker, or maybe you've been trading at a CFD firm, like maybe even TradeX, where you can only trade one account at a time, that you don't, like, you're probably thinking like, oh, how the heck am I supposed to manage three accounts? But in reality, this is still one trade that you're taking. For example, if you're trading like any prop firm that's a futures prop firm, they'll tell you like how many accounts you can have, but basically all of them let you have three or more, at least three. So if you buy three evaluations, they will literally let you link them all together, and so you can pass three evaluations at the same time. You can trade three accounts all at the same time at the click of one trade. Like, it's not like you have to go and toggle between three accounts or take a trade three different times. No, you're literally executing one time. It just gets copied into three evaluations or three accounts at the same time. So if you didn't know that, like, this is your cheat code if you're trying to like scale faster and bigger in 2026. So again, it just comes down to having a system. So that's what the PDF, the last thing I'm gonna say. You have a system, whether it's Liberty X, which is my strategy, or you have your own strategy, whatever. Just make sure you understand your risk reward ratios, understand your win rate, and if it's a profitable strategy on paper, then the only difference is now you. Like, do you actually execute what the strategy can produce you, you know? Because again, you can backtest my strategy or any strategy that you're learning, but then when it comes time to trade, are you hesitating on entering? Do you close too early? Do you not close profits? Are you taking extra trades that do not follow your trading plan or your system that you took because you had FOMO or revenge trading, or you got bored? Like, I can go through the whole list. I mean, I'm sure you guys already are very familiar with your pitfalls. And if you don't like know your pitfalls, that's a problem. You know, like, that's the first thing you need to do, is you need to understand who you are first. Like, what's your bad tendency that's holding you back? Is it revenge trading, over leveraging? Maybe you're too scared to exit, like, enter trades. I don't know, you get me? Like, you gotta do your homework on yourself. And honestly, I kind of hope you do that ASAP, right? Like, that's something you want to do during the last couple weeks of the month. You know, like, to end the year of 2025, is actually go back and be like, damn, you know, like, what was my biggest thing of 2025 that I did good, and what was the things that held me back? And then you have to like be very mindful of that stuff and create, you know, barriers or whatever for you to prevent yourself from self-sabotage as much as possible. We're still gonna make mistakes no matter what. It doesn't matter how long you're trading for. You're still gonna make mistakes. It's just about like how often you make the mistake and how big the mistake is. If you're not gonna eliminate it completely, but if you just like limit the amount of mistakes, or like the amount of damage that those mistakes are doing, and you get yourself back on course faster, that's really what it comes down to. It's just like sports, you know, like, you can miss, like, let's say you take 100 shots, you can maybe like, or let's say you take 20 shots in a game and you made like 8 out of 20. That's not that great as a basketball player, for example, right? But the next game you might hit 12 out of 20. You get me? And it's you can have a bad day, bad game, bad week, whatever, but it's just about getting back on track. And if you're putting in the work, if you understand your strategy, it should in the long run work out. If not, then you have to really look at either your strategy not being a profitable strategy, or you not executing properly. It's only one of the two. I think I had a question from Steve here. The highest amount of accounts you're copying right now. So I like to do it where you're not taking all of the accounts at the same time. Okay, so what I mean by that, and that's part of this if you keep going in the PDF, and if you don't have it, I'll send it to you, bro, and anybody else that doesn't have this. But there's copy trading like all of your accounts, and then there's rotating the firms. Now there's this website that you guys need to be familiar with, and there's other ones. I have it in the PDF, but TradeSyncer, this is something that you guys should look into. Again, this is assuming that you've gotten payouts and that you've traded, you know, like you've made some type of progress where you can handle copy trading, right? Because personally, I don't like to copy all the accounts at one time, because if you do that, okay, let me go back to the PDF. If you're gonna do copy trading, you can use TradeSyncer or Replicanto or all these different ones, right? But if you use TradeSyncer, you're gonna be able to, like, let's say, mix Apex with Top Step, with this, with that. And on the PDF, you see all the pros, right? So the pros is that you can take the trades across all of your accounts at all the different firms at the same time, but you're gonna have issues with slippage and stuff like that. That's honestly normal, because you have a software that's trying to like execute a position across multiple prop firms at the same time. So there's always gonna be some type of lag between at least one. Like, let's say you have 4 prop firms at the same time connected, you'll probably have like 2 of them that copy really well, and then 2 other ones that, like, let's say you made $200 in a trade, the ones that are lagging, you probably made only 100, and then you even probably have one that lost some money. So this is like the way you're gonna go to get like your biggest payout at once ever, because you're gonna like trade 4 different prop firms at the same time, and if it hits, you're gonna get 4 different payouts from 4 different prop firms from one trade that you took, if that makes sense. But personally, I like to what's it called? Rotate the accounts, right? So you can't, like, for example, let's say that you have 3 accounts at Tradeify, and then you have 3 accounts at Alpha, right? You're not allowed to like take a trade on one. Like, let's just use prop firm A as example. Prop firm A, you have 3 accounts. You can't take, or at least most prop firms, or almost all of them, they won't let you take a trade on one of them without taking it on all of them. So like, if you buy 3 accounts in a certain futures prop firm, it makes you trade all 3 at the same time. It doesn't let you trade one on account 1 and then account number 2 later, and then account number 3 later. It makes you trade all of your accounts in that one firm at the same time if you buy multiple. Okay, now you could rotate different firms. So you can buy, let's say, 5 Top Step accounts and 3 Alpha accounts. You can trade your 3 Alpha accounts, request a payout, and then trade on Top Step after. You get me? And when you do that, you're going to be able to obviously diversify your risk, which is why I think Kate said it here. Top 1 and Traderify have a copier within their own platform. You don't need to buy a third party. That's what I'm saying. Like, you need to know like what prop firms you're going to be using. If some of them don't allow copy trading, that's 100% facts. You need to understand if they let you do that or not. And like I said, you can have multiple accounts within one firm and trade them all at the same time within that one firm. But some people will have like multiple firms connected with like TradeSyncer, for example, and that way you're taking it across multiple things. So again, there's pros and cons to doing both. Personally, I like to just like focus on one firm with multiple accounts within that firm, get a payout from there, then start trading a separate prop firm, maxing out there, and then moving on. Again, there's also some prop firms that have daily payouts. So like, the scaling part is something that realistically is not gonna be for most people, you know, like in their journey. You know, most people just need to focus on just trading one eval and getting consistent, and then, you know, maybe have multiple evals within one firm. Once you've kind of like gotten to that point where you're very consistent and you need, like, you're like, yo, like, I already am consistent, I've already maxed out at one firm, then it makes sense for you to think about using multiple firms and rotating. And then I think the last thing you do is use a trade copier to trade all your firms at the same time, because at that point you're like at the top 0.0001 of the game. Because most people, what happens is they'll trade a bunch of different prop firms from everywhere at the same time on a trade copier because they just want to get a huge payout, but they haven't even kind of like earned it, if that makes sense. Like, you're just trying to get lucky, or you're trying to hit big one time. I don't think that's the route people should be focused on for consistency. I think people should like earn the ability to do that, if that makes sense. Like, be able to trade one account, then have multiple accounts within one firm, then have multiple firms where you're rotating accounts, then consider using a trade copier. You don't gotta listen to me though. You can do whatever you want, but just always understand the risk management, not just of like your accounts that you're trading, but of your own personal money, you know? Because like, we all have a budget, or you should have like a budget, right, of your business, of like how much you're going to invest into your business. So if you're buying, you know, evaluations or whatever, you know, like how much can you handle losing? You get me? Like, can you afford to throw away, you know, I don't know, 100 a month, 500 a month, 1,000 a month, 2,000 a month? Like, what's the budget that you have of failed evaluations or accounts, you know? Because the worst thing is that when somebody like sees, oh, I can have 20 accounts at Apex, let me wait for a big 90% off discount, and I'm gonna buy a bunch of accounts all at one time, and whatever, like, you go and spend still a decent chunk of money, and then you blow all the accounts in a week. It doesn't matter if you got the accounts at 90% off. Like, that's all a marketing gimmick, you get me? Like, they're gonna obviously promote these huge discounts and stuff because they know at the end of the day you're just gonna blow it. You know what I'm saying? So again, scale. It's not just about scaling your amount of accounts you're trading and all that stuff. It's about scaling like your own money into what you can handle. You get me? Like, everybody should start on CFDs with like a 10 or 25K account, not a 100K account or a 200K account. At least not until you've seen that you can pass challenges, you can get a payout. Because I'd rather have somebody like know what it's like to purchase a challenge and fail it with $50 than to buy a challenge and fail it for like $600. Like, how many times could you have bought more smaller accounts that give you more reps in the game versus just trying to like make a lot of money fast in the moment without any proof of concept that you have a good system or that you can confidently execute a system without fail? You know what I'm saying? So those are things you got to think about. Down 2% on alpha, and I have 1 week left. Yeah, I mean, if you have like a challenge and you're like, or an evaluation, and you're gonna have to pay to reset the account next month, it always just comes down to just looking at what does it cost me to do a reset and what does it cost me to buy a new evaluation. Because if the price is roughly the same, for example, to buy an evaluation from scratch or to hit reset, you might as well just up your risk and go hard and try to finesse passing it before the month is over. Because regardless, you're going to have to pay it soon, if that makes sense. You get me? Like, now, if hypothetically a reset costs half of what it costs to buy a new evaluation, then it might not make sense to do that. You might as well just hit reset, save some money, and just do it the right way. But if it costs you roughly the same to fail and buy a new one versus resetting, you might as well just up your risk and try to finesse it. You just gotta know that you finessed it though. You know what I'm saying? Like, you gotta know you kind of got lucky if you do that. But regardless, you know, if you get the job done, you get the job done. That's what I'm saying. Like what Kay was saying about like sticking to your risk management rules. Like, again, it just, you have to kind of know if you do up your risk for the sake of passing it, you have to know that like, oh, that doesn't mean you get to just keep that size now with your actual account. You get me? Like, you might have upped your risk to just beat the timeline and you finesse passing it for whatever reason, like you actually pull it off. don't think like, oh, okay, I'm just gonna stick to this risk now. Like you would have to come back down to earth and realize like you kind of got lucky with that one specific evaluation and then take it from there. Um, that's my opinion. But yeah, these are good conversations. That's why I want to make sure you guys understand what's out there. Like the number one thing is some people just don't know the progression, you know? So I just think that everybody just start with like little to no money invested. So either demo accounts and or small challenges or evaluations that don't really like impact your pocket much, just so you can get the hang of entering trades, closing trades, learning your strategy, feeling comfortable with the process of placing and trades and all that stuff. And then you can like go for your challenge once you feel like, okay, I know what I'm looking for. I know what my you know my I know my strategy enough to know when I should trade, when I shouldn't trade. Like scale your risk and scale your confidence. You know what I'm saying? Like small money, small accounts, put in the reps, see that you passed an evaluation or a phase, you know, have that emotion, have that excitement, get your first payout, and then see how often you can replicate that, scale into bigger accounts, scale into multiple accounts, and then once you really max out one firm, then you can try to like get a different firm and then start copy trading down the road if you want to do that. But yeah, as long as you guys know like what the path is and you know how to get to these tools and resources, the only thing at that point then is just you, like your strategy, your ability to execute, your mental toughness to handle drawdown periods, get back on your game, and really just sticking to, you know, like your method, your process. That's really like the biggest thing that we all have to do forever. It never stops. You know, you can't ever be off your game if you're gonna trade because the market is just the market. Our results are just gonna reflect our mentality, our discipline, and our consistency. So let's get it. Yeah, so like I said, the video for the strategy I'm gonna have uploaded on the back office. So when you go to Akashex and you log in, it's not there right now, but I'm gonna show you something. When you do log in, it will be in this section in like hopefully the next couple of days. So you're gonna go to like Academy section. So Academy, and then you can put all courses, and then you'll see Educator Series, and then you can find my profile here, and then Start Now, and then it'll be here. It'll be like where it says Liberty Strategy. So I'll have this updated. Regardless, the stuff I teach on here is still very valid and is still useful for like what I do, but technically like the exact strategy that I do now is not this. But still, I want everybody to always go through the educator series because it does teach you like the most important things. But then on the live sessions, if you go to live sessions and you look at the recorded, you can find me here. And then I have all my sessions like saved here. You can go back and back and back and back. Now, I will say like the last week of sessions was kind of like dull because, you know, we had like holiday markets. So if you look at mid December and any sessions really before that, I basically show it like every day, where we actually look for positions in real time. So like you can see on the 17th, we were looking at these cells. Yeah, you can see we were looking at these cells here, and I think that trade ends up like running really nice. And we look at like previous days. I always try to like go back and look at prior examples. I show the confirmations of the strategy, everything like that. So I always do a bit of teaching and a bit of live executions depending on what the market's giving me. Because sometimes like the market is, you know, giving us our setups, and then other days the market is kind of sitting around and I have to just kind of recap other setups or talk about different things just to like pass the time and teach. So yeah, just make sure you go through the pre-recorded sessions because again, you're even gonna see live executions sometimes with the students on there. So yeah. Cool. All right, yeah, that's basically the bulk of what I wanted to talk about today, though. So yeah, let's have a great first week. I hope that you guys have a great start, and yeah, I'm excited, man. We have a lot of cool stuff that's gonna be coming out, I think, over the next week or two. So just keep an eye if you guys are in Akashex for like some big calls that we're gonna be doing. It should be myself, Arabella, Preston. You're gonna see some flyers and stuff coming out soon. I just don't want to say much on it because I know that they're gonna do a rollout for it. So just know there's some new stuff we're cooking up soon. And yeah, what we're working towards right now is the Akashex leadership cruise that's gonna be in March. That's gonna be, I think, like the coolest like event or team thing that we're doing. Um, the first quarter of 2026. So I know that the cruise is disembarking. I don't know. It's here in Miami. That's all I know. The cruise is gonna be from Miami. It's gonna go around the Caribbean. So that makes my life very easy since I am like 30 minutes from the port. So yeah, that's some cool stuff that we're all looking forward to. So make sure that you guys, um, you know, look into that leadership cruise because at the end of the day, I always say like trading is great, but the network of people that you have in your life is huge. And what better way to network than to be on a boat with your favorite traders and leaders in the business? So definitely, again, looking forward to that. So cool, man. First market outlook for the year in the books. Pretty simple, straightforward, but very powerful information, especially for those that have big plans this year of scaling with multiple props and everything like that. Make sure you get that PDF and start off strong. So appreciate you guys. I will see y'all on the sessions in Spanish tomorrow, and then Tuesday, Wednesday, Thursday, English, and then we'll be back next Sunday for our next outlook and kick off this year with a bang. So much love, y'all. Appreciate you. See you guys. And as always, let's run it up.